Hey everyone, welcome to another Art of Crypto video. Today's markets have basically not moved. They've been going laterally at 0.4% decrease, and it's now standing at $1.9 trillion. It's close to the $2 trillion sort of psychological mark, and I believe that with such a bull run sentiment going on in the market, it might reach this in the next few days, obviously barring any bad news, as I say. So Bitcoin has barely moved. Ethereum is down by 1.5%, which is a lot higher than the average decrease of the crypto markets. XRP down by 2.63%, Cardano up by 3.83%, and Solana up by 1.03%. So you can see a mix and match of cryptocurrencies that are rallying and cryptocurrencies that are sort of going down. And this is because of token specific factors. As you can see here, Bitcoin dominance is at 42%. 2 years ago, this number was much higher at around 80 to 85%, which meant that 80 to 85% of the crypto market cap was composed of Bitcoin, and this is down to 42%. So no longer are other cryptocurrencies extremely dependent on the price of Bitcoin and its movements, but they have their own factors which cause them to move independently of Bitcoin. Looking at the Bitcoin charts, it is still trading between 42,000 and 45,000. This morning, it tested the $42,000 support level, but quickly it got bought up again by the bulls, and now it's trading just above that level. And I think that because there is consolidation happening in the market and there isn't so much movement happening in the market, it will continue trading between these two bands. 42,000 being the support level and 45,000 being the resistance level. On some news, traders bet on Ether staking after Ethereum 2.0 upgrade. So crypto traders are now focusing on progress within the crypto ecosystem, and they're particularly focused on smart contract blockchain, Ethereum's impending proof of stake merge. So last week, Ethereum developers successfully tested the long-awaited merge of the programmable blockchain's proof of work, which is what Ethereum is currently, and proof of stake chains, which is what Ethereum will be going forward. And this merge is dubbed Ethereum 2.0, and it will allow users to hold coins in a cryptocurrency wallet to support the network operations in return for newly minted coins. And staking becomes analogous to passive investing because how proof of stake works is the more coins that are held by people and staked, the more transactions can be validated per second. In order to incentivize people to hold the coins, they get some returns. And it is predicted that Ether staking yields are likely to be in the range of 10 to 15%, which is higher than the US inflation of almost 8%. And this makes it very attractive because it is like an investment. It is like a fixed deposit whereby you get between 10 and 15%. And this is beating inflation, which means that the real value of your money is going up. So as I said before, through the merge with the proof of stake chain, fees previously earned by miners will pass on to being earned by those who are staking. So Ethereum 2.0 is also predicted to attract institutions. So with the merge test run completed successfully, researchers expect the mainnet launch to happen at the end of June. And moving to proof of stake means it's easier for institutions to adopt it since they don't need to defend the energy consumption part of investment argument associated with Bitcoin and proof of work coins. So how proof of work works is you need to work with computational power in order to mine the coins, which is the fact with Bitcoin. So the more computational power there is, the more coins are mined in the same time frame. And in order to have more computational power, you need to use more electricity, which makes proof of work extremely energy intensive. So moving to a proof of stake system will be a lot more energy efficient, and it will cut down electricity consumption in Ethereum by more than 90%. Also, the merge is likely to make Ether a deflationary or store of value asset, a narrative primarily tied to Bitcoin. A deflationary token basically means that the more time goes on, the less supply there is of the same coin. Let's say that Ethereum has 100 million coins in circulation for argument's sake. What this means, if Ethereum is deflationary by 5% every year, in 2022 it's 100 million, in 2023 the supply will go down to 95 million. And this is very attractive to investors and very attractive to people who want to hodl, because if supply decreases and if demand is the same or increases, the price is going to shoot up. It's just simple supply-demand economics. And what they say is that following the merge, the amount of Ethereum issued is projected to drop by 90%, which would lead similar levels of fees to reduce Ether supply by as much as 5% a year. So Ethereum will go from a primarily inflationary currency where the supply keeps on increasing to a deflationary currency which its supply will decrease by a predicted 5% a year. Also, some experts says that the sharding upgrade due after the merge will be a more significant bullish catalyst. Sharding is basically the splitting of the Ethereum network into multiple portions called shards to spread the load. The change is designed to ease network congestion and boost transaction speeds. And sharding is basically scaling, which means that it's breaking up Ethereum into little pieces, making it easier to handle transactions, and therefore the number of transactions handled is larger, the speed of the transactions is higher, and the cost is lower. And this is how Ethereum will become more scalable. Qualcomm, which is a chip producer, launches a $100 million Metaverse fund. And they have done this to back extended reality, artificial intelligence, and augmented reality tech companies. And this investment project is called the Snapdragon Metaverse Fund. You might have heard of Snapdragon. They are the chips in most of the Samsung phones. The firm stated that it's aiming to become the ticket to the metaverse via its 5G, AI, and XR technologies, which it claims to be critical to the metaverse. Qualcomm's website also indicates that it is aiming to combine a smartphone, VR headset, and AR glasses into a single extended reality device in the future. And they say that extended reality could replace all the other screens in your life. Mobile XR has the potential to become one of the world's most ubiquitous and disruptive computing platforms, similar to the smartphone today. Finally, I want to speak a little bit about El Salvador's Bitcoin bond. Now they're postponing this bond due to unfavorable crypto markets. El Salvador's finance minister announced today that the Central American country, El Salvador, has postponed issuing its much anticipated Bitcoin-backed bond as it waits for the market conditions to improve. And these bonds are dubbed the volcano bonds because they propose the use of the Conchagua volcano as a power source for Bitcoin mining. So the government originally planned to issue $1 billion in these volcano bonds to investors between March 15th and March 20th, which has already passed. And the government intends to convert $500 million of these into Bitcoin and to use the other $500 million for infrastructure and Bitcoin mining. But I think this does not make sense why they would want to postpone. The prices are way down since they made Bitcoin a legal tender. It was around $68,000 when they made Bitcoin legal tender, and now it's down to about $42,000. So they should basically ape into Bitcoin now because it's relatively cheaper than before. They should dollar cost average. So there is something going on here that they're not telling us, but they claim that current market volatility and the war between Russia and Ukraine have prompted authorities to postpone the launch date, possibly until September. So these are the reasons that they're offering for why they're postponing the launch of their Bitcoin bonds, but I believe that there's something else that they're not mentioning here. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, share this video with your family and friends, and I'll see you tomorrow for the next one. Invest wisely, and cheers.